If you're buying a car with a loan or leasing it, your insurance situation is a little different than if you pay cash. That's because lenders and leasing companies want to make sure their investment is protected. In most cases, you'll be required to carry full coverage, that's liability, collision, and comprehensive, until the car is paid off or returned. This isn't about the lender being picky. It's about ensuring the car can be repaired or replaced if something happens. Gap insurance is also a big deal with financed cars. Since cars lose value quickly, you could owe more on your loan than the car is worth if it's totaled. Gap insurance covers that difference so you're not stuck paying for a car you no longer have. Leasing companies often add even stricter requirements, like higher liability limits, because they don't want to take on unnecessary risk. So while financing or leasing gives you access to a nicer car without paying all upfront, it also means your insurance costs may be higher. But in return, you get peace of mind knowing that both you and the lender are protected if something goes wrong. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel, and don't forget to hit the subscribe button. We'll see you in the next one.